Maverick Traders. This is Rob Reinhold, and as usual, I'm joined by Mr. Darren Fisher, and we had another just up week, just like we've seen over the last couple months, just another solid up week with this bull market that just really won't stop here. So let's talk about what we're going to discuss in the trading room this session. We're going to discuss what happened this last week. We're going to look at the news, the economic reports, which we had some big ones this last week. And then, of course, we always are looking at the broad markets. Then we're going to get into the current market analysis, where we are going to go through every single sector and give them all a score. We're going to give the broad market a score. And then we're going to talk about this week's major news reports coming out. And then we're going to break down into each sector and give one trade from each sector and some possible options trades to make around it. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. So let's get into last week's news here. With this latest market run, we have now set one-year highs. So we have really got pretty much all of last year's bear market out of the way and recovered it back. And you know what? It's still going, and it's a much broader rally than it started out with. Remember, back in May, the Qs, large cap tech stocks, started taking off, and everything else didn't really act all that well. Lately, everything's been acting well. Everything is much more broadened out. The 10-year bond got absolutely hammered this week. We were all the way back up to 4%, and when we got our CPI and our PPI reports, boy, it just fell right back down into the range, and the stock market really likes a 3.8 on the 10-year bond. It makes it very happy and makes people willing to put money to work in the markets. And then we did officially start second quarter earnings reports. We heard from the banks, JP Morgan, Bank of America, and Citigroup. They pretty much all gapped up and then gave away all their gains and closed negative for the day. It wasn't a big negative. So really, they just lost their gap, telling you that they've already had a nice run. The good news wasn't enough to push it any higher. So it's not negative, but it's telling you that things are priced fairly highly here. Let's talk about the two big reports this week. The CPI, take a look at that. 0.2%. Look at the year over year. It's down to 3%. That is really close to what the Fed wanted. And then the PPI came out on Thursday, and it was even weaker, 0.1%. So we got these two reports that pretty much matched what the market was thinking about inflation. The market rallied in advance of these numbers, and these numbers came out really spot on with what the market thought here. I think we may be looking at a first, Darren. We might actually get that soft landing. What do you think?
It's starting to look like that, I got to admit. I mean, I didn't think the Fed could pull it off, but it looks like they are. They might just be at that sweet spot right now. A few weeks ago, the market's priced in 2 quarter-point hikes, and as of a few weeks ago, I suspected that there was a third one that wasn't priced in. I've got to take that off the table right now. I think until proven otherwise, the Fed just goes with 2 more hikes before in the next 6 months and lets it run at that. And if they can pull this off, I mean, we still, time will tell, then they should probably pat themselves on the back once and then try to make sure that, we don't run inflation up to what we had before.
Well, pat themselves on the back for a problem they sort of created. Like, I'm not putting it all on the Fed. All the bailout packages really was a thing that around the world, not just in the U.S., but around the world. All that new money is really what caused it. But yeah, they should pat themselves on the back. All right, let's go into the market. Let's take a look at all the numbers from last week, and we'll take a look at the charts. Strong markets across the board. Dow Jones up 2.2%, S&P 2.5%. The Qs, again, 3.5%. Russell over 3.5%. Oil up, gold up. Everything was up this week, just across the board. Let's take a look at these charts. We had this nice ascending triangle pattern we talked about. And last week in the trading room, Darren and I said, hey, you know what? We might have to hit this one more time before we break out, but the breakout was inevitable. And the market said, nope, I don't need to do one more dip. I'm going to go ahead and break out on Wednesday, and you can see continued movement. I do want to point out Friday's candle. Friday's candle, when you get a candle like this at the end of a run, this is called an exhaustion candle. And we saw an exhaustion candle back here, this dark cloud cover. So I think that we are at a point where the market has run out of gas. Now, again, just temporarily, but I think we're going to get a pullback or a base next week. Darren, what do you think about that?
Yeah, I think we have to. I mean, it's looked like this before, but it's been an orderly pullback. We probably don't even get much of a pullback. I mean, you look at what's happened. A pullback to the 20 is completely reasonable. But again, we might just go sideways. We might not see the pullback that people are looking for, and we just end up going sideways. And then you can see Friday's candles in a lot of the different sectors looked even more extreme. I mean, see, all we got on the Qs was a long upper shadow right here. So down 8 cents, down 8 cents on the Qs. So this is one of those ones that it could pull back. I would be planning on a pullback. My outlook for the week is a -1, but I would probably say actually a -0.5, and flip a coin whether we pull back or base.
And I totally agree. I think any pullback isn't going to have much energy behind it. And a lot of times, you're right, we get more bases than pullbacks. And I want to just point out the breakout point. If we do pull back, I think we pull back to, what is this, 374? I mean, that's like 1.3, 1.4% max of a pullback I think we get. So yeah, any pullback we get is likely to be very shallow and really not last all that long. And this is just the VIX. So we just see this going lower and lower and lower. So as the fear has left the market, plan on this continuing to move lower in the near term. So let's talk about our market outlook. Darren and I think we both agree that this market had a nice run over the last 5 days, and probably we have a 5-day period of just cooling off, either going nowhere or pulling back. Now look, the market doesn't have to do anything that myself or Darren thinks it's going to do. The market can completely ignore that, but that's what the signs are showing us. That's what that red candle on Friday is showing us, that okay, at the end of a run, you get that shooting star gravestone doji on the Qs. Most of the time, you get a little bit of a pullback. We are going to get some major earnings this week. On Tuesday, we get some banks. On Wednesday, we get Tesla, Netflix. So that's going to be the big day, I think, on Wednesday. And then the next week after this is going to be even more major earnings. So earnings are going to really start pushing this market over the next couple of weeks. And we'll have to see what happens with the earnings reports when they come out and their projections going forward. And of course, this is the third week of the month, so this is monthly options exercision. Make sure that you have all the positions taken care of before Friday's close. Not a whole lot on the calendar this week. We've got retail sales on Wednesday, and really that's about it. We've got 2 manufacturing numbers. We got the Empire State on Monday, and we've got the Philly Fed on Thursday. But these have not really mattered at all to the market. They've been really weak, and the market has totally ignored them. They're starting to improve, but the market has totally ignored them. So really, I don't see any major news happening this week that's really going to shake anything up in the markets. So to score our broad markets, we are still at a +3. We've been at a +3 since the end of May, and we continue to be at a +3. But Darren and I, we both agree, a slight pullback on the week with the -1 weekly outlook. So let's break down all the sectors.
Yeah, you can see across the board. I mean, pretty much everything was up except for energy. Everything was up at 2% or over. I mean, you've got consumer did the best at 3.28, but right behind it was communication services. So this was just very, very broad. But you're going to look at these things, and this is where I always look for these signs of exhaustion. Let's go right into the sectors right now. Okay, so here's utilities, and this looked a little bit, it looked better than what it was. The problem is we're at the top of a range. Okay, and utilities, the past couple of months, utilities has not held in very well. So I'm going to zero on utilities right now. I can't be negative on it, but I think this bases, if it does anything, and it could quite easily pull back into that 66 area. It would not surprise me at all. It's still in the range. It's not really showing signs of wanting to break out. Let's wait and see what this week does. But I think with what we're expecting for a broad market pullback, it's going to be very difficult for utilities to actually break through. So just bear that in mind. Communication services, you look a little bit weaker on Friday than some other stuff here. So I'm still at a +2, but I think this does pull back. You can see that this is one of the furthest ones away from its range. Pulled back right to that 66 area. I think is entirely doable. I mean, that's a point and a sixth, a point and so it's really not a whole lot to go there. But this is still looking really bullish. You want to wait till next Friday and then start looking at some August positions to put on a communication services. I think you'd be well served doing that. Real estate's another one. This one's at a +2. This one held in on Friday. Okay, its weekday was Wednesday, but it held up there. It just can't break through. So I think this is going to be the one that bases. This is going to be one of the stronger sectors to take a look at this week. For whatever reason, people still wanted to hold on Friday, which, hey, that's great for them. And, the range is getting a little bit large on there. You can see a couple times we pulled back to that 38.50 area right there. And that been was resistance, is now it looks like it's putting in support right there. So I think we're a base is in the mix right here. Industrials had its high down Wednesday, and it reversed. It's in a pullback right now. I'm still bullish. I'm at a +2 on this, but it's just kind of interesting that this peaked a couple of days before everything else. There's two areas that it could pull back to. It could pull back to right to that 107 area or 106 as well. Either one of those are good pullback targets right there. This place still looks good. Wait for the pullback to end. And then, again, I'd be looking at some long August positions in the industrial sector once I get a confirmation candle. Healthcare is at a solid 0 right now. It did have a good day on Friday, but we're still in this range. We're still basing right here, and it's right in the middle of the base. So I think that's what healthcare is going to be looking like. Looks better than it did a couple of months ago, but still this is one that I'm not going to be overly bullish or overly bearish on. Financials, still at a +2. What concerns me with this one is that's a huge bearish engulfing candle on Friday right there. I mean, gap up and sold off all day long, nearly at the close, nearly at the lows. So this, I think, pullbacks. If there's a sector that I would think pull back even more than the other ones, I think it's going to be financials, especially with bank earnings coming up here pretty soon. I mean, this is still going to be bullish. It pulls back to the 20, but I think you're going to see a lot of volatility in banks this upcoming week. So just keep that in mind. Consumer is the only one I'm at a +3 on, and it's earned it. Consumers definitely earned it. We've had some very discrete moves, but it's just been up and up and up. Closed up there. We had a little. I mean, that's barely an upper shadow on that candle right there. And so, hey, I'm at a +3 on consumer. It's looking pretty good. Tech, nice little +2 on tech. The problem that tech's going to have is it's butting up right at previous resistance right there. And so we're right there. If it can hold up, it was a little bit of an ugly day on Friday. Overall down, 0.15%, not too bad. But this is one that I think it could fall right back into that range, between about the 167 area. So that's we could keep going in some sort of ascending triangle right here. But I think this does pull back, possibly at least to the 20-period moving average. Materials met a +2. I mean, technically, you'd say, well, you're above everything. This should be a +3. I'm just taking a look at Friday's market action, Friday's candle. This is one I think does fall back down a little bit to right there. And it's funny, all these support areas are coinciding pretty close to that 20-period moving average. So if it does pull back, I think it pulls back to there. and bounced a little bit. I mean, you look at Thursday and Friday's action, you could make the case for a base, but I think materials wants to pull back, but I'm still bullish on it. And energy, mild +1 here. This is one, it had a serious pullback on Friday. It was down 2.6% just on Friday, but this right back into that range right there. I think we probably reassert support in the upper half of that range is what I'm looking for. And right about there. Once we can reassert support, we're still above the 50, you're still above the 20. I think you take some midterm mildly bullish positions in there. So let's see how everything stacks up here. Healthcare and utilities both at zeros. Energy mild +1. Consumer at a +3. Then we've got 6 sectors sitting right there at +2. Tech, comm, services, real estate, industrials, financials, and materials. So everything is pretty bullish right now. Almost decidedly too bullish, but we're expecting that pullback, and I think these sectors right there maintain the score that we gave them.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
So taking a look at some possible trades. Last week we were sideways to long on SLG, and it did exactly what we wanted it to. It was up 1.2%. So this is still looking pretty good. If this trade has a little bit more time on it right now, but right now it's doing what we want, so we're just going to let this one chill in our portfolios. Right now we're looking at digital realty, DLR, and we're going to say sideways to bullish on this one. The sector, this is what the sector looks like. Remember, real estate's one of the better performing ones. So we're going out to August and going to go long those 115s, and then this next Friday we're going to short those 120s against it. So we're just asking to move about 1.5% in a week. Then we're going to hold on to those long calls if it gets up there. If you want to play it a little more conservatively, just go out to August 4th, those 117, 123 bull call spread. In communication services, last week we were long Comcast, the A shares, and this has done well for us. A little bit of a pullback on Friday, but we were up 1.4%. This trade still looks viable right here, and we're pretty happy with it. We're looking at this one, tugs at my heart 2 different ways, and I can make the case for sideways definitely. 1, my son loves this game, and 2, I hate it, just simply because he's always asking me for Robux. So you see from the chart pattern, there's a lot of dads out there that have taken the same stance that I have and are just like, yeah, no more Robux for you guys. So we're just going to say sideways on this one. It's a little bit above the channel right there. I think, the midpoint of 44, I think it holds out here. And you just build your butterfly around that midpoint. Where you want to put the wings is entirely up to you. Where you want to put the time frames is up to you. But I think a 40, 44, 48 is probably a good butterfly to go out to. And healthcare. Last week we were short Amgen, and Amgen didn't care. So it was up 4%. And, if this falls back down, we've got a little bit more time. But this one, I think we're just going to say, okay, we were wrong, move on. What we're looking at right now is Cardinal Health. This is a nice high base. The 20-period moving average is caught up to it right here. So you can see very discrete price action right between 93 and 94.25. I mean, for $100 stock, that's a lot. I'm going to go out to August and go long those 90s, and then short next Friday's 25s again against it right here. So I'm not asking it to do a whole lot. I'm asking it to just keep basing a little bit, maybe go up 1% or 2. And this one looks particularly good to me.
Right, let's jump into the industrial sector. Last week, long GE, and it did really well, up almost 2%. So I know that I had a diagonal call spread. I had a 105, 109 diagonal call spread. I rolled that out this week. I actually rolled up $1 and I rolled out another week. So I still have a diagonal on. It's just now at 110 as the top price. So let's talk about Spirit Aerosystems, SPR. As you can see here, it had a little rally. It went up to here. We've failed here at this moving average, and we're starting to go lower here. Now look, it's not a big downtrend. It's not strong. So look, we're going to play it as a -1. We're going to pull out our diagonal put spread. We're going to go out to August, do the 30th, $30 puts, and we're going to sell next Friday's 28. Right here at 28. We're just right here. So this week, we basically want this thing to go down 43 cents. Look, if it really tanks, we'll close it out with a small gain. And if it just hangs out here, we're really happy being in a sideways to slightly bearish trade here on SPR in the industrial sector. I also agree with Darren that the financials are fairly ripe for a sell-off. Last week, we had a butterfly on Bank of America. And the butterfly, we had the midpoint at 29. I closed it out for 15 cents. I bought the excess calls back, the 29s, for 15 cents. That's almost a max gain on a butterfly. That doesn't happen very often. And I want everybody to remember this trade. This was a 28, 29, 30 butterfly, because you will always remember the times where your butterfly was perfect. And then the day of expiration, the stock took a big jump or took a big fall and ruined your butterfly. I want you to remember, because this one was looking pretty terrible. It was outside of our profit window at the open. At the open, it was looking like it was going to be a max loss, but then sunk all the way back down to max gain, exactly where we wanted it. I always point these out because we all have selective memory on only remembering the bad ones. And the good ones we chalk down to how good we were. That was all skill. And the other ones were just bad luck. This week, looking for a short here in the sector. This is on the NASDAQ. NDAQ. You can see bear rally up to kind of this area where it couldn't get out of its own way after earnings. We got this red candle here. I'm looking again to be not all that bearish. I'm looking to do a 55-50 diagonal put spread. 55, 50. We want this stock to go down 61 cents by Friday, and then we'll reevaluate the trade. We'll either take our profit or we'll just simply get out and move to the next one.
So consumer, last week we were short BJs, and this one did okay for us. I mean, again, on Wednesday, this wasn't looking too good for us, but Thursday and Friday it came in nicely, so it was down 1.6%. I'm probably going to close this one out next week. Early, just there's a lot of volatility here. If it keeps going down, that's good. But again, you could be in that position where, hey, you just size things for max loss and let them run. It's something like this. Like you said, Rob. On Tuesday, this was not looking good for us. But it came back in Thursday and Friday. Sometimes you just have to trust your analysis. We're looking at Coupang, CPNG. This one's going to be sideways to bullish. And this is another diagonal call spread out there. Go out to August 11th, so a week before August expiry, and go long those 16s. And then short this Friday's 18s against it right there. We're just saying, hey, just go up 20 cents. That's all we want, just 20 cents in a week. And then we're going to reevaluate, see where we are. The good thing is we're at support right now. If you want to wait on Monday or Tuesday to get a confirmation candle, it's entirely doable as well. Technology. Last week we were short Okta, and it actually went up 3% for the week. But you can see on Friday, bearish engulfing candle. If you're trading some more time on this one, this could very well fall back down to the profitability area for you. So depending on when you closed it out, you're looking pretty good. Looking at Zoom Media, ZM, this next week. We're just going to say sideways. It's that simple July 28th, 2 weeks, 65, 70, 75 butterfly. That's it. We're just expecting it to go down 60 cents sometime in the next 2 weeks. And I think this is a very viable trade. The profit area on this one is probably going to be, between about 66.25 and 72.25, I think. So the profit area in this place is going to be huge. That's why I like these trades.
The materials sector has been a good sector. It's at a +2. We had a trade on FCX short. We were playing this to the sideways to long side. It was a little bit stronger than we wanted, and it poked its head out of the top of our profit window, but we got 1 week left. If this thing pulls back, I think it'll be a really nice trade here. It was a little stronger than we expected, up 6%. This week, we're looking at Vale. So we're looking at a sideways trade here, and we're seeing that their stock has really got some resistance up here at 14.50. And down here, we got some support right around 13. One of the strategies I really do like to do is play these sideways trades to where if it does, it's got some real serious resistance up here. So we're just looking to do the $14 strike price here. So the 13, 14, 15, and just for a week. This thing only had monthlies, so you either had to choose to do it for a week or for 5 weeks, and I cannot stand a 5-week butterfly, so I'm just looking to do this for the week. And let's wrap this up with energy. EOG, we said, hey, EOG looks really sideways now. Well, EOG said, hold my beer, I'm going places, and it ripped higher. It ripped all the way up to 124. So, as you can see, it is outside of our profit window. We have the 110 butterfly with the top of 115. This thing is going to have to make it down quite a bit, down into the 114 area for us to have a profit on this. We'll see what happens. That's a great thing about these butterflies, though. Here's the great thing. I'm under no pressure. This thing ripped higher up to 124. I didn't have to make a decision. I position sized it for max loss. It took off. And then on Friday, it had a big fall. I could still be profitable on this one. This one gave me no worry whatsoever because I position sized it for max loss, and I decided I'm not going to manage it until it gets closer to the expiration. I'm going to let it move around. This week, look at this breakdown on Exxon. Exxon has been lousy this whole time here, low base, and we're now breaking down on the bottom of the low base. If this was a different market environment, I would be much more bearish on this one because this is a great looking chart pattern. The problem is we're in a really strong bull market. So I'm looking to do a wimpy trade, a 100, 102. That is about the wimpiest trade you can ask for. This is basically going to be a 1-to-1, 50-50 win-loss risk-reward trade. I'm not asking you to do a whole lot. Just go down below 100. All right, well, that wraps up our trades here for the group. If you want to go share more trades with the rest of the group Mavericks, you guys know where to go. Log into the website, go into the members area, and let's keep that forum active as possible. We really love watching our traders all working together. So let's wrap this up. Bullish markets, period. Period. We might get a pullback. Who cares? Remember 2021. We had a bull market all year long, and we had pullbacks every couple of weeks, and those should have all been bought. Think about the last 2 months. All the pullbacks should have been bought. We're in the same environment here. Yes, I know this trend will end at some point. There's no doubt about it. But right here, you just have to keep going with the trend. Buy the pullbacks. We are seeing some signs of short-term exhaustion. So as Darren said, if you want to wait until Friday, let this market take a little week off and take a breather before you get back into the bullish side, fine. That's totally fine. It makes a lot of sense. As always, focus on those sector strengths and weaknesses. Make sure that you are always hunting in the right place for your longs and shorts. Well, that is it for this week of the Trading Room. Everyone have a great weekend. Goodbye, everybody.
Good trading, everyone.